what is debt elimination with regard to, or how does it fit into infinite banking? Well, that's an easy one. Infinite banking, for the most part, one of the biggest things it's used for is debt reduction. And you go back to just the general idea of everybody's heard of debt reduction plans and how it works. And for those of you who are not familiar, you start with, for example, the smallest balance credit card. And if you're going to add, in this case, let's just not even put the infinite banking into it, but let's just say you have an extra $100 a month you want to use towards payoff, but you have a $500 credit card. So you normally pay $50 a month. Now you're paying $150, and you pay $150 till it's paid off. And then you have the next credit card up. Maybe it's a $1,500 credit card, and you use that $150 that you were paying in there to add to maybe another $150 or whatever it was you were putting into the other one. So now you're paying $300 a month, and you kind of just snowball the money, right? The payments. And you're not, the only extra money in that scenario you came up with was the extra $100. Well, picture that without ever having to come out of pocket any extra money. You're basically taking money that maybe you repositioned from, maybe on fixed bills. There's ways that we could sit down and help you work through it. And some people are like, well, where am I going to find that money? Our goal is to have you doing this and your lifestyle doesn't change. So that's the greatest thing about infinite banking is your lifestyle doesn't change, but maybe something's repositioned. Maybe we get you placed with someone. I personally, don't do property and casualty, for example. So I don't personally do auto insurance, but there's ways to get your auto insurance lowered. And I know people that I can work with that would help you with that. And there's ways of lowering, maybe health insurance or something else. And I know people for these specific reasons, just for that. Maybe in the future I'll get licensed to do that. That way I can help. But right now I'm focusing on what I know and what I specialize in. And, that's more of a holistic approach, and I'm working towards that. But right now, for the sake of sticking to how this works, so you're putting, and then of course, you always have the situation where you're going to be paying for life insurance. If you have kids or you have a plan of some sort in place, which most people do, especially if they have kids, especially if they're married. Even if they don't have kids and they're married, they want their spouse to be taken care of. So protecting what you have, protecting in the event what would happen. I mean, it's kind of like the idea, it's like people say, well, what about, why would I take out life insurance policies on my children? Well, one, it can serve as a really great college fund. It can serve as a fund to use towards their first car, depending on how early you got it and how much you're funding into it. But there's a lot of things. And then of course you can utilize the banking benefits of it in general, but why would you do that? Okay, well, you think about it. If you were to lose your child, what would your state of mind be? Would it be such that you would be working? I couldn't even imagine. I don't even want to imagine. But if I did, I would imagine I probably wouldn't work for at least a year or something. It would be a long period of time. So whenever you have these things in place, in the event that the most horrible thing in the world that could happen is losing a child, it helps you through that time. And money by no means could replace your child, but it could help you keep from losing everything because you don't want to work. You don't, anyway, I'm getting off the subject, but these policies can be used. You would be paying for insurance anyway on yourselves as parents for the sake of your children, for example. And there's a certain amount you're putting in there. So now if you just reposition that money and some of it in your savings or whatever, there's ways of doing this without ever changing your lifestyle. And by the same token, because you have liquidity in those policies, you're able to take the money out, pay off a debt, especially a high interest debt like a credit card or anything else, because even then the interest is calculated differently on a life insurance policy than it is if this were a car loan or a home loan, where you still come out ahead. But by the same token, you keep control. You keep control of what you're doing. You keep control of your money. You keep control of the assets. So if you pay off something, those payments that you would have been paying into that, along with your premium, go back in there. Nothing's changed. The premium was going to be getting paid in anyway because you repositioned yourself, or maybe you had the excess cash to put it in there. Maybe that was your savings. Maybe you were a saver. Maybe you were putting a large chunk away. Whether you're paying per month or you pay it annually, so you pay it all at once for the policy, you're able to use the leverage of borrowing against a policy. So along with what you're paying already, again, nothing changing in your lifestyle, and that card being paid off, for example, now you're paying the payments from the card, but it's going back into your policy. And so you're paying yourself off. And so as that money gets recycled through your policies and you get another chunk of money going, whether it's from loan payments, because that kind of snowballs after a while, and whether it's from that or premium or both, that stuff starts to snowball year after year, year 2, year 3, and you're recycling your money the entire time that goes in there. As you get big enough chunks, you take it out and you put it towards something, and you put it towards a debt and eliminating that debt. And some people are like, well, why would I eliminate my mortgage? Well, there's strategies you can use even for that. Again, talk with your tax professional, because they need to have the strategy down or be comfortable with it, or it's always something they need to be able to go and defend. So, but whether that be a tax attorney or a CPA that knows what they're doing, or both, you're looking at, there's ways of even getting more complicated. You start your own private finance company, and that finance company, you're borrowing the money personally. You're using it for business because you're going to invest it into your private finance company. And then you're paying, say, 5% interest from the insurance company. And because you're borrowing it to use it for a business purpose, you're able to write off the interest there. Well, normally you can't, because normally it's you went and paid off your car personally, and that's not gonna, that doesn't work. But if you borrowed it and then charged a higher interest rate to the private finance company, and the private finance company probably charge a higher interest rate, even if it's half a percentage point or a percentage point, there's a write-off going across all the way. There would be minimal income. It would hardly even be taxable, but the write-offs you would get in comparison, it would be big, especially if you are self-employed. So your cars are now company cars, and those company cars are paying, they're making the payments on those company cars, and the interest is deductible for the company. And then the company deducts because it's paying on the money that it borrowed from you. And then the money that you borrowed from the insurance company, that's deductible to you. But there again, I am no tax professional as far as that's concerned. I don't do taxes. on that standpoint. I can only tell you my personal experience. I've had more than one CPA or tax professional do that or vet it for me to say that, yes, this is doable. But there again, disclaimer, check with your tax professional. But as that starts to snowball, this happens a lot quicker than you think. But if you had 5, 7, maybe even, let's say even 10 years, and you had everything paid for because you're just recycling your own cash, that's amazing. In some cases, it's a lot less. I mean, it just depends on the individual, it depends on the funding, it depends on a lot of things, but for the most part, it's going to accelerate any debt reduction. And, people are like, that sounds too good to be true. Maybe it is, maybe it isn't, but I can tell you from personal experience, it works. And from many other people, from clients, from people that I knew that were doing it as well, just like me, maybe I turned them onto it years ago. It's been their experience as long as you stick with it. As long as you, what they call is play honest banker. You pay yourself back, just like you would pay the loan. If you took the loan out on your car or your house, you'd pay it because you have to. You pay it or they're going to take it away from you, whether it's a house or a car or anything else financed, or you have to pay your credit card or it hurts your credit and they'll cut off your account and you won't have that credit card to utilize anymore. So maybe you leverage it for the points and you pay it off every month. It just depends on what you're doing with it. But you're able to make sure that all that stuff is paid off if you carry a balance. Most people do. This can be started, small. I always come back to, I didn't start off big. I still wouldn't call myself, as far as what I'm doing, anything just huge. I have clients that are doing, on a lot larger scale than I am. But it's a deal where this can be utilized by anybody in a lot of different situations. It can be utilized for just paying off a house. It can be utilized for paying it all off. And if anybody really wanted to get into it, really talk about it, really see what their possibilities are, schedule a strategy session. There's a link down below. And there again, if I don't cover something, if somebody has questions on something that I said, I know I ramble a little bit, but probably a lot, not a little bit, but if there's something I left out, if I got sidetracked, I didn't cover something, maybe I was leading up to something, it's possible that I left it out. Leave a question in the comments. Email me. There's a lot of different, there's a lot of different things that you could benefit from in this situation. Anyway, please like, subscribe, and click the notification bell so whenever my new videos come out, ideally if I'm providing value, you'll want to know that. And we'll catch you on the next one.